Hey traders, hope you are well and enjoyed the long bank holiday weekend. Back on Tuesday, this is the 26th of August. Full market analysis, I guess, but not much going on in the market. Very low volumes. No news out today, no news out tomorrow. We've got inflation data out, I think, on Thursday. I'll let you know nearer the time, of course, in the VIP room. In the meantime, gold, well, looks like it wants to go up, but not quite sure. On the 4-hour chart, we can see we've got a very strong supply zone up here at 34.30, somewhere around this area. So we can expect the price to climb in the next few days, although it's very, very sideways. And if we go down to the 10-minute chart here, we can see completely sideways. There was a trading opportunity at 2 o'clock this morning, Asian session, but nothing to write home about. One of the questions coming in, which is great, thanks Laurie, is, and I presume that once someone asks a question, I presume that there are going to be more people asking a similar question, so that's always useful to get that. But so let's have a look at what's going on. Let's first of all click around. Let's click around. Let's have a bit of fun. Oil, making money. Pound Canadian, making money. New Zealand Canadian, making money. Euro New Zealand, making money. Pound New Zealand. Aussie New Zealand, fresh trade. Put this in the VIP room. If you're not in the VIP room, then jump on board. 50 quid a month, you'll easily make your money back. Canadian Swiss, making money. Canadian yen, making money. Bitcoin, early one this morning. Cover this one in the next few minutes. And I'll explain what we're going to do today. Before I do that, just have a look at DXY. Completely sideways. Yen futures. This is the advantage of the Advanced Pro charts. It tells you when not to bother, when there's no trade, or where there's a strong likelihood of a trade. The indices are doing exactly the same as well. So let's go into a bit of coaching, shall we? Where do we start? Let's start at Bitcoin, because that's a fresh trade put into the VIP room. And so there's a couple of things here. One of what I talk about quite a lot is early entry. It's not about really picking the perfect entry. There's no such thing as a perfect entry or a perfect exit. It doesn't exist. Trying to get the perfect trade to be perfect every time doesn't exist. It's a fallacy. So what I would suggest is getting into an area of high probability, high profitability with very high risk to reward. Return on investment is what you're looking for. So there's a couple of things here. And I'll give you some other examples of the other charts so that you can actually see what's going on. So we can see a couple of things here. Let's zoom out a little bit. We can see that the price moved down into this area here. Let me draw a line so I can. So here, we can see that $109,219 is the exact precise point to where you want to be buying into this. There's a couple of reasons for this. As previously mentioned, I'll keep doing it over and over again because we've got some new guys in the room. Buy power of 73 above 60, 65 I prefer, but above 60 is strong. If it says 80, 85, no brainer. 73 is very strong. So that's the tick box. The other thing it's doing, it's converging. So you can see that this order block here, buy power 73, is converging into this area here, this demand area as well at the same time. So it's building up pressure So this is a high liquidity zone, if you like the way to see it. There's going to be a high liquidity sweep. Because the buyers are all lining up there. It's invisible to everybody else. No one else sees this. No one else knows about it. So it's really important to have your settings correct, because this is why it's so powerful, is because the settings are unique in the market. So this is, well, nothing's happening, of course, but one of the things you can do, as previously mentioned, is you can dial down to the 2 hour, see what's going on. So the same line appears. So the price is sitting on that area. The same demand appears. 1 hour. So even on the 1 hour, we've got a buying power of 71, which is very, very strong. And that's really important. So you've got a very strong buy going on, despite the fact that it's doing nothing. So the other thing to look out for is a combination of factors. Which we're looking for is divergence. Really, really important. If you haven't read my book, then please let me know and I'll send it to you free of charge. This is a really important piece of knowledge, which is automatically drawn on your chart here, and it's green for buy. So this divergence means that the price is achieving lower lows, yet there's going to be other things in the background. Might be an RSI, might be a MACD, but it doesn't matter what it is, but it's telling you that something is not quite right about this price going down, and it needs to go back up, albeit temporarily maybe, but we can back a lot of money in the meantime. Conversely, of course, we do have sell power up here, 77, very high. So the money is there, entry point is there. It's already there before the event, so don't worry, these are leading indicators, not lagging. In other words, they are telling you where the price is going to go before the price goes. So, and we have negative divergence in play, so we have convergence, divergence, and then change of character. Personally, if you're going to get into the position, there is perfect. You might not be at the chart at that particular time. I might not be at the chart at that particular time, but nonetheless, that's exactly what you're looking for. It's a 4 hour chart, so there's no rush. There's no rush. There's never any stress with what we do. It's all very calm, and it's all very disciplined and patient, because with that combination of patience and discipline, you will only get those powerful trades coming in at the right time. So allow me to give you some other examples, just so you get the markets are quiet, so we can do this, can't we? What else are we going to do? Play golf? Done that. So here we go. Let's have a look at oil, shall we? Oil. I put this in a week or two ago in the VIP room. If you're not in the VIP room, then you know what to do. So here we have a combination of convergence, divergence, change of character. So convergence, divergence, convergence. So these two order blocks are joining together to create a very strong brick wall where the price cannot break it. Of course it could, but it's very, very rare. So the buying power of 81, very strong. Okay, so your stop's going to be below the swing high when you get in, and your entry point, let's look at that. And don't forget, as you enter the position, you'll have your spread, of course. So the entry point is that black line there on top of this order block, of the demand area. And so $63.13 makes sense. And you're going to go for 2 times risk minimum. Can be a lot more, but in these markets we'll go for the nearest target, I think is the fairest way to say it, because we're not actually achieving any targets at the moment because the markets just aren't moving. But everything is in profit, so that's really, really good. So it means that your positions are going the right way, at the right time, at the right entry point. Your stop loss is in the right place, and so your risk to reward is very, very good. So shall we dive down? Let's see what the 2 hour looks like. Exactly the same, actually. 81, power 81 on demand, very strong demand. Hour chart, power 79 on demand. So power, oh, just jumped up. Oh, 79.80. So it's very strong, in other words, despite very quiet markets. Pound Canadian. Now, despite the fact, now this is why it's important to get in at the very earliest entry point to get your massive risk to reward, because if it comes off, then you're going to make a ton of money. You won't need many trades like this to change your game. So here we go. So there's the entry point there, right on the bottom of that sell power of 69. We can see that there's two supply areas. One is up here above it, but one is being created by the fact that the price has not broken upwards and created more supply to the downside. So the entry point is 187.15, and your stop loss is above that area on the swing high plus a little bit more. And your risk to reward, see this target here, it's a very weak target. It might turn out to be stronger, but it's very weak demand area. So here's the strong, very strong demand area here. So that's a weak demand area. Here's a strong demand area. So aiming for the strong demand area in a market that's not moving is okay. You're going to have to be patient as to how far it goes. Now, in this instance, whenever the Advanced Pro Charts reversal system, which is what it's called, is all green, so there's your entry point here. See that there? So if you can get in at that point there, then this won't have turned green yet because you've had no change of character. That's my entry point. That's that I try to get in as early as possible so I can get all of that. Not being greedy, it's just that's what I prefer to do. Now, in this instance here, where we did send a signal a couple of weeks ago, then the change of character has already occurred. So if this happens at midnight, it doesn't matter. You can ignore that because you've missed it. Don't ignore it. What I'm saying is you just wait for the change of character and wait for this break of this trend line here, and then go long on the change of character. And this goes green. Now, once you're in the position and the price moves above the 20 SMA, then of course you're going to hold on to that position as long as possible. And the longer you keep it open, the better. Most people can't do that. Most people don't do that because they fear it's going to go the other way. So this measures the chances of this reversing, and it increases 84%, 90%, 98%, 98.5%, and so on. And of course, at this point, you don't want to be long, do you? See that there? That's already waiting for you there. So very easy to trade, very easy to follow. If you miss the entry point at the earliest possible entry point, then you can always go on the change of character when it's all green and just hold it for as long as it's green. Let's have a look around, shall we? Canadian yen. Bitcoin we've done, no change of character. So when it's red, you're getting in early. You're getting in early because there's no change of character here. You'll notice the change of character when the price goes green here and it moves above the 20 SMA. Okay, so that's an entry point there, isn't it? Stop loss, previous swing low. Makes sense? And then you hold it for as long as it is green. It's surprising how long it actually takes to actually get there. 98% there. And of course it fails at that point there. But you wouldn't want to be in it there anyway. You don't want to be long at the very top of that with a 98% chance of it reversing. It does not make sense. Now conversely, we had a rejection here on this high liquidity sweep here, and sell power 77 into a very strong supply area. Change of character here, change of character here, price breaks the 20 SMA. Now once you trade the change of character, then of course you're going to have a much wider stop, aren't you? And your risk reward has to be 2 times, no doubt about that. If it doesn't fit that criteria, don't trade it. And then we can see that this is what's exactly happening now. So it's got a 14% chance of reversing to the downside. Very low. Oh, 22.7%, there you go. So it's very low. So the chance of this rising becomes very, very strong. Just flicking through to give you some good examples. Tricky when there's little going on. No, this is a better one, so this is okay. So this is the pound Canadian. You should be short this, trade at your own risk, of course, and price is going nowhere. But what's happening here, whilst this is red, you hold. 90% chance probability of it reversing. That means going up in this instance. But as we know, what can happen, it can go to 98.5 or even 99% chance of reversing upwards before it actually does it. So it can do this before it gets to the 99%, 98.5%, let's say. So understanding that will help you hold on to the position much longer. The key here is most retail traders, what they do, they see a profit, they take it out because they're frightened of actually losing that profit. And then the system and the trading strategy breaks down. You're talking about a strategy which is forever, not just for now or for the next few weeks. You're talking about making life-changing differences to your lifestyle so that you can spend more time with your family and friends and just enjoy life, because you don't want to be looking at these charts, not especially today. There's nothing going on. So let's have a look at the pound Aussie. So again, look at that, beautiful. I didn't trade this one, but I'm short the New Zealand, I'm long the New Zealand Canadian, short the pound Canadian. So see that there, beautiful, absolutely beautiful. And this is 46.9, so this indicates that there's a lot of selling going on here down to this area here. So if you're not trading that, then get in. Why not? What else can I tell? Let's have a look at the pound yen. I mean, this is typical what's happening at the moment. He banked about 150 pips recently, and then at 348 pips a couple of weeks ago. But we can see this here. When you see the price actually, well, that's interesting. Right, okay. 98%, 97.9% chance of the price actually reversing to the upside. So we could see a buying opportunity here. Definitely not at the moment. But when you see prices doing this, just drifting in the middle of something here, just throw it away. Don't even entertain it. Just here, Aussie Canadian, just drifting in between supply and demand. No good to man or beast. All right, so happy days. Hopefully you are very happy with your charts and making money, probably for the first time in a long time, despite quiet markets. Despite quiet markets, we haven't seen any big movement on markets yet, but they will come. Don't worry, just be patient and disciplined.